what we can see is price has retraced into this daily bullish breaker. Notice how many times it's been utilized as support on price, multiple times. It's an important price range. And so as long as price remains above this breaker, I anticipate the buy program continuing, order flow remaining bullish. And because order flow is bullish, I anticipate higher prices. Do I have a drawn liquidity? Well, yes, we have this bearish Fibonacci gap that formed on the left side of the curve. If you look to the left, you'll see this imbalance. As long as price remains above this daily bullish breaker, I anticipate this price range being reached, meaning this would be retracement lower, expansion higher, and this retracement will be the left side of a market maker buy model. If, however, price displaces below this bullish breaker, we would then initiate a sell program, and as long as price would remain below this breaker, this inverse breaker, if price displaces below it, this would become an inverse breaker. If price would displace below it, then I would anticipate the next drawn liquidity to be sell side liquidity. But until that occurs, I have to remain objective and I have to say, okay, we're in a buy program, and as long as we remain in a buy program, I anticipate higher prices. But if we go into a sell program, I will shift my narrative. Instead of identifying draws on liquidity that are higher, I will say, okay, do we have draws on liquidity that are lower? If so, that will be my targets, and I will look for fractal market maker sell models. If you now go down to the hourly time frame, what I said in the previous outlook was as long as price would remain below these bullish order blocks that formed on the left side of the curve within this market maker sell model, then I anticipated previous week low to be reached, and what we can see is that price retraced back into this price range, formed a high, and then expanded lower into the previous week low, taking it out by one tick. And so for now, price remains in the sell program on the hourly time frame, as long as we remain below these bullish order blocks, which formed on the left side of the curve within this market maker sell model. Price closed below them. Notice how many times they've been utilized as support. Once closed below, must be utilized as resistance. Meaning, as long as price remains below these bullish order blocks, I anticipate a further run on the previous week low, and then how price trades at the previous week low will determine order flow. If we reject it and produce a change in the state of delivery, we can then say, okay, this is likely now to be a market maker buy model, at least into this daily premium array. Or if price displaces below it, the next drawn liquidity would be this price level here, which is the high of a balanced price range, where we have an equal amount of sell sides and buy side delivery. I'll also need euro or pounds to align with DXY, just like I use ES to validate draws and CSD on NQ. I use the same thing when looking at DXY and Forex. And so just to summarize, order flow is bearish as long as price remains below this price range. If we displace above this price range, that confirms a buy program, but I would also need euro or pounds to go into a sell program. And we could say, okay, now this is potentially a market maker buy model. Or if price remains below this price range, we can then say, okay, further sell side is the draw, and then how price trades around the previous week low will determine order flow going forward. And what we can see is that price retraced into the high ends of these bearish mitigation blocks, formed a high, and then expanded lower below the previous week low. Once we closed below the previous week low, that became the invalidation for the sell program, because this is also now a bearish breaker, a bullish order block that formed at the original consolidation of this market maker sell model. If price takes out buy sides and sell sides, which we have, becomes a bearish breaker. Don't get confused, this is just a bullish order block that has been inversed. Notice how many times it's been utilized as support on price. Once it's placed below, must be utilized as resistance. And so as long as price remains below this previous week low, this bearish breaker, I anticipate this balanced price range to be reached, which was my next drawn liquidity below the previous week low. Once price reaches this BPR, I'm then going to wait to see how price will trade at the low end of this bullish breaker on the daily time frame. Either we're going to form a low to continue higher, or we're going to displace below it, and then we have further sell side targets. And so the game plan is very simple. Look for market maker sell models into this BPR. Once that BPR is reached, either look for a low formation, meaning a change in the state of delivery, which for now would be displacement above the previous week low, or look for displacement below this BPR and this daily bullish breaker, and then look for more sell side targets. That is the game plan going into this week. What we can see on the daily chart is that price remains in a buy program. I had a question in the Telegram about why exactly I chose this bullish breaker as my invalidation level for the buy program, and I didn't use this bearish breaker that's just formed as the invalidation. And I will show you why. Well, in order for me to utilize a breaker, a bearish breaker, meaning a change in the state of delivery, because we're in a buy program, in order for me to utilize a bearish breaker when we're in a buy program to validate a sell program, we need to have reached a point of interest, because then I'm actively looking for the signs of a high formation. But if our drawn liquidity has not been reached, being this price range here, there's no need for me to constantly look for breakers. For example, I want you to take this bearish breaker here, where we had a high, low, higher high, lower low. This would be a bearish breaker. And this bearish breaker failed. Why? Well, because the drawn liquidity was higher. If the drawn liquidity had been reached, that would become our point of interest, and then this bearish breaker would signal a change in the state of delivery, and then we could look for a market maker sell model. But because the drawn liquidity was higher, we know that breaker formations are likely to be utilized as purges on liquidity. I'm going to quickly play a clip from the CSD lecture where I explain this. Now, this is very important. Just because you see a breaker block formation does not mean this is a change in the state of delivery. The narrative is the most important component. We only look for a reversal when we are aligned with the correct narrative. And so do not make the mistake of going down to the 1 minute time frame and trading every single breaker block formation that you see. Why? Because the higher time frame, order flow, drawn liquidity, point of interest is the most important component, because we only look for breaker block formations once we've already framed that lower time frame market maker model, where we've got the entire narrative behind us. If you just look for breaker block formations and you trade them, you're literally ignoring the most important thing, which is the narrative. Narrative being the higher time frame, where price is going. If you ignore that, you're going to trade every single breaker block formation and fail significantly. So this is very important. Narrative is the most important thing, and we only ever look for CSD once everything up to this point in our protocol is aligned and correct. Why? Well, because if we just look for a breaker block formation and, for example, the draw liquidity is lower, then instead of this being a bullish breaker where we've got a bearish order block which is displaced above, this is just going to be a turtle soup, which is going to be a run on buy side liquidity to then continue lower towards the drawn liquidity. Same here. If, for example, the drawn liquidity is higher, then instead of this being a bearish breaker block formation, what's in fact going to occur is this is just a turtle soup, a run on the sell side liquidity to then continue higher towards that drawn liquidity. And so the narrative is the most important component. If you ignore the narrative, you're going to get caught out on this pattern here. Simple as that. And so what I was basically saying is just because you see a breaker formation does not mean a change in the state of delivery. Because we haven't reached a point of interest, a drawn liquidity, that means that I'm not actively looking for bearish breaker formations. And because I'm not looking for breaker formations, so actively looking for a change in the state of delivery, instead, I'm looking for the PD array that would invalidate the current buy program. So there's a difference between looking for CSD and having an invalidation level. We're anticipating high prices. I'm anticipating this level here being reached. So I'm not going to actively look for a bearish breaker because I know that price will just take out the low, liquidity purge, and then just run higher. Instead, what I'm looking for are PD arrays that have been utilized as support or resistance on price multiple times. Look at this bullish breaker, resistance, support, support, important price range. Therefore, as long as price remains above this bullish breaker, this is my invalidation for the buy program. And therefore, as long as price remains above this price range, this is my drawn liquidity. If, however, price reached a point of interest here or a drawn liquidity, this bearish breaker formation would be the change in the state of delivery. But because that's not the case, this is the invalidation because I'm not actively looking for a change in the state of delivery. I'm just looking for the invalidation of the current delivery program. So I hope that clears up the question for the individual who asked. And so for now, I anticipate this to be a retracement lower, form a low, to then expand higher into the next drawn liquidity. But if price was to displace below this bullish breaker, this would then invalidate the current buy program. And then we have to consider the possibility that this is a high formation, and then we are potentially in a market maker sell model, and we look for sell side targets. But until that occurs, I'm going to be looking for a low formation here to then continue higher towards that drawn liquidity. So if you now go down to the hourly time frame, what I said in the previous outlook was as long as price would remain below this bearish breaker, which is a bullish order block that took out both buy side and sell side liquidity. This is a bearish breaker. Don't worry about terminology. This is an inverse order block. It's a bullish order block that's been inversed. Notice how many times it's been utilized as support. Once displaced below, it must be utilized as resistance. And what I said was as long as price remains below this price range, I anticipate the previous week low and this balanced price range, which is our drawn liquidity, being reached. Now, price has reached a drawn liquidity inside of our higher time frame point of interest. And so here, I am actively looking for a change in the state delivery. I'm not utilizing the left side of the curve, arrays that have been actively utilized as support or resistance. Instead, what I'm looking for is, for example, a bullish breaker formation. And so what we have here is a low, high, lower low, higher high. These bearish order blocks took out both sell sides and buy side liquidity, meaning this is a bullish breaker, these up close candles. Therefore, we are now in a buy program on DXY. Does that mean that the next drawn liquidity is higher? Well, when we look at GU and Euro, we will see a slightly different story. And so I am waiting for a bit more evidence to say, okay, this is a low formation and we're now going higher. But for now, this is a bullish breaker. This is the invalidation for the current buy program. What I want to see is retracement lower into this price range, form a low, and then expand higher into our draws on liquidity. Do you notice the difference between what we did on the daily time frame, where we weren't looking for a change in the state delivery, and on the hourly time frame, where we are looking for a change in the state delivery? And the difference is that we've reached a point of interest, which, just to remind you, is that daily bullish breaker. And so for now, as long as price remains above this price range, I'm anticipating buy side being reached. However, if price would displace below this price range, utilize it as resistance, we could then say, okay, we're no longer in a buy program, and then sell side being Monday's low, as well as this sell side liquidity pool here, will be the next drawn liquidity. What we can see on the daily chart is that price is now retraced all the way into the low ends of this daily bullish breaker. Why do I say retrace? Well, because currently price remains in a buy program. This bullish breaker, why am I not considering this bearish breaker as a change in the state delivery? Well, because we haven't yet reached the drawn liquidity, being this imbalance here. And so I'm not actively looking for bullish breakers and bearish breakers to form. Instead, I'm utilizing arrays that formed on the left side of the curve that have been utilized as support or resistance multiple times. We've got this bullish breaker, which has been utilized as support. If displaced below, must be utilized as resistance, and therefore a change in the state delivery will occur. But as long as price remains above this breaker, I anticipate retracement lower, expansion higher into this imbalance here. This could be a reversal, and this is in fact the beginning of a sell program, but I would require price to displace below this price range to confirm that. Then I can say, okay, we're now in a sell program, and now we'll look for sell side targets. But until then, next drawn liquidity is this imbalance, as long as price remains above this bullish breaker. If we now go down to the hourly time frame, what I said in the previous outlook was as long as price would remain above this bullish breaker, where we had a low, high, lower low, higher high, order flow remains bullish, and the next drawn liquidity is buy sides. Notice how here I am looking for a bullish breaker formation, and the reason for that is because we'd reached a drawn liquidity, being a balanced price range, which is this level here, after taking out the previous week low. And so I was actively looking for a change in the state delivery. And what we can see is that price retraced into the breaker, formed S&T with Euro relative to these two lows here, followed by an expansion higher. And so, again, FOMC was very underwhelming. It's just this wick here. And because FOMC, NFP, and CPI are major news events, we want to see those huge expansions. But because we didn't see that, it's like, okay, are we just consolidating? Because assuming there was a drawn liquidity, FOMC should deliver to that drawn liquidity. But because it didn't, that's a huge red flag. And so that's why I say low probability conditions based on technicals right now. But remaining objective, as long as price remains above this low, which is an S&T swing low, order flow remains bullish, and the next drawn liquidity is this buy side liquidity pool here. If, however, price displaces below this price range, that would invalidate the buy program, and then it's possible we would see sell sides as the draw. But because we've reached the low end of that daily bullish breaker, I'm not looking for further sell side targets. This is the lowest price can possibly go while remaining in a buy program on that daily time frame. And so by definition, I have no draws on liquidity that are lower. And so instead, I'm just going to remain patient and wait to see either if we're going to continue higher towards our draws on liquidity, or if we invalidate the buy program, then I'll be neutral and I'll just wait for a new high probability draw liquidity to align. Just because the markets are open does not mean that you need to identify draw liquidity. Because if you force your idea, if you force what you want to see on the markets, you're going to pay for it. You're going to take a loss, you're going to be frustrated, and then when those conditions arrive, where the draw liquidity is so obvious, you don't have enough capital to engage, and you get frustrated. And so this is why just waiting for those market environments where every single thing aligns is so important. I do not feel obligated to trade. All I'm going to do is I'm just going to wait to see whether a high probability draw liquidity becomes validated, and if so, I'll follow the protocol. If not, I'll disengage. Simple as that. What we can see on the daily time frame is price has retraced into the low end of this bullish breaker, which was our invalidation for the current buy program. Notice how many times it's been utilized as support on price, important price range. And I said, as long as price remains above this price range, this bullish breaker, I'm anticipating retracement lower, expansion higher. The reason I said that was because my drawn liquidity was higher, being this imbalance here. And if my drawn liquidity has not been reached, then what I can do is I can wait for retracements into this kind of raise, being this bullish breaker, form a low, to then expand higher into my drawn liquidity, being that daily imbalance. And so for now, as long as price remains above this breaker, I'm anticipating retracement lower, expansion higher. If we now take a look at the hourly time frame, what I said in the previous outlook was, in order for the buy program to continue, we had to remain above this bullish breaker that has been utilized as support on price. There's also SMT at these lows here. However, what we can see is that price displaced below the breaker, back above it. This was consolidation, utilized that support, expanded higher, utilized that support again, and then expanded higher into our first drawn liquidity, being Thursday's high. So for now, the invalidation remains the same, this bullish breaker. If, however, price would displace above these imbalances that have been utilized as resistance on price on the left side of the curve, if price displaced above it, this would become my new invalidation for the buy program. And so if price would close above, I would anticipate retracement lower, potential low, and then expansion higher. But for now, order flow is bullish, as long as price would remain above this bullish breaker. If price would displace above, next drawn liquidity being Tuesday's high, this imbalance here, which has been utilized as supports, buy side, as well as this buy side liquidity pool here, which is now the previous month high. And again, if price would displace above this price range, it must be utilized as supports. And if price would displace above this price range, again, it must be utilized as supports. Why? Because they've already been utilized as either supports or resistance on the left side of the curve within this market maker buy model. Simple as that.